In this video, we're going to talk about how to record income into QuickBooks Online without using the accounts receivable workflow. Accounts receivable basically means recording an invoice and then at a later date recording a payment and eventually taking that payment and recording it into a deposit. We're not going to talk about that workflow in this particular video. I have an entirely different video that goes through the entire accounts receivable workflow, so check that out. I'll put the link in the description. In this video, we're going to be focused just on recording the money that's coming in the bank as income and the money may be coming into a cash account of some sort as income as well. So let's start with the most basic transaction, which is the deposit transaction. We're going to click on the new button on the left-hand side of the screen on the left navigation bar, and then under Other, we're going to click on Bank Deposit. Once you click on Bank Deposit, very first thing you're going to see on the left-hand side in the top is a drop-down menu where you get to choose which bank account you're going to deposit into. So whether you're looking at a bank statement and just copying information that's from the bank statement into QuickBooks, or you know in real time that money's coming into the bank, maybe you're on the bank's website and you're seeing the deposits coming in, just make sure you select the correct bank account to make the deposit into. Now, once you select the bank account, it tells you what the current balance in QuickBooks that bank account has. So maybe that helps you also make sure you are in the right account. Then you're going to pick the date in which the money was deposited into the bank. So let's say, for example, this was on February 1st. Then where it says receive from, you're going to select the specific customer that you're receiving money from. This is actually an optional field. You actually don't have to select a specific customer. So maybe you don't know who the customer is or you don't care to track customer specific information, then you can just leave that information out. The field that you do have to select is account. Now, account in this case is not asking you which bank account the money is coming into. That's what this top left drop-down menu is. That's for where the money, the account for that the money is coming into. This account in the line portion where it says add funds to deposit, this is the income account that you want to record the income into. So we're going to click on the drop-down menu and we should see multiple income accounts. So depending on what your chart of account looks like, you might have your own type of income accounts. And if you know what the money that's coming into, what it's for, and you're separating different lines of income, then you would pick that. But let's say, for example, this is for on-site services. Let's say that's the correct income account I want to put this into. I can put additional description like check from Marvin or something like that. Now, of course, if I'm going to actually track the customer's name, it's better to actually create the customer in the drop-down menu and we'll put Marvin in there. But if you choose not to create customers, you can put in the description whatever you want. Then under payment method, this is optional too, so you can put, however the customer paid you. If you're looking at the payment methods and you don't see one specific that you need or pertains to the particular transaction, you can click on Add New and essentially create your own payment method. I'm going to put here check, and then another optional field, the actual check number from the customer that paid you. So I'm going to put here the check number that actually deposited, and then the amount, which happens to be $2,500. Okay, and that's it. If there's a single transaction or a single line that I want to record, essentially that would be what the entire deposit is for. Then I click on Save and Close, and that would finish that transaction. Now let's do an example where we're actually tracking each individual customer that's paying us, and maybe we have multiple checks coming in into one deposit. So I'm going to click on the new button again, then I'm going to go into bank deposits. Let's say into the same Chase checking account, but now on February 2nd, I received two payments from two separate customers. So I'm going to click on the drop-down menu and select one of my customers. Let's say ABC customer paid us, and they paid us for on-site services. Then I'm going to skip description here. I'm going to put payment method. I'm going to put here check. And let's say this is the check number. And let's say this was $1,000. Let's say a brand new customer that's not even in my database paid me another $500. So I'm going to click on new. And then I get to create my customer here on the fly. So let's say this is Mary Smith or something like that. Whatever your customer's name is, we'll click on save. And let's say she paid us for remote services. So we're breaking down and classifying the income based on how we want to organize our income in our chart of accounts. And let's say this one was paid in cash and we deposited the entire cash of $500 into the bank. Okay, I'm actually skipping this cashback goes to Because sometimes in rare cases, small business owners will have a check, go to the bank, deposit the check, but withdraw $100 or $200 from that check. If that's the case, if that was ever the case, then what you would do is you would probably select one of your petty cash accounts, which is where you would be holding any sort of cash. We're going to go back to that, but that would be what you would do if, for example, somebody were to take $200 out of that $1,500 deposits and keep it. Of course, it doesn't make any sense because I'm already depositing cash, but that could be a way for you to track, okay, what is my income and what is the cash that I'm keeping in the process. I'm going to delete that for now to avoid any confusion. We are going to deposit $500 in there. And then I'm going to click on Save and New instead of Save and Close. And let's say we have a different customer that paid us in cash, but the money didn't make it into the bank account. So instead of selecting the bank account, I'm going to select a petty cash account. You should always create a petty cash account. You can just create it by going into bank, a detail type cash on hand, that you can call it cash on hand, petty cash Michael, petty cash John, assuming that you have multiple people holding petty cash. Create those petty cash accounts if you want to know that you're getting money, you're getting income, but it's not making it into the bank. That's a good way to track it. So let's say, yes, we received cash on Saturday, February 3rd, and this is from a new customer. We're going to call this customer XYC Corp. And let's say they paid us for some on-site services, and it was in cash, and I can put here fixing their issue or whatever notes you want to put to keep track of what's going on with this income. And let's say we received $250, and then we click on Save and New. So now you see all these components of income that we have been recording using the deposit screen. The other way to record deposits is by going straight into the register. So I'm going to click into the gear menu on the top right of the screen, click on the gear menu, and then click on Chart of Accounts. I can click on Chart of Accounts, and then I'm going to have a list of all my accounts, banks, petty cash, and obviously everything else in my Chart of Accounts. And I can go straight into the register. So for example, I'm going to go straight into this Chase checking account. I'm going to click on View Register here on the right side of the screen. And then I'm going to go into essentially what's a check register, or what looks like a check register. So if you look in this particular check register, we have a beginning balance we entered for last year, and then we have these two deposits, the $2,500 and the $1,500 that I show you live on the screen. Now notice that the one for $2,500 shows as the account on-site services, very clearly shown on a line item in the register, but the $1,500 says split, and the reason for that is because when you actually go edit that deposit, it's actually hitting multiple types of income accounts. So QuickBooks only has in the register space for one line. So anytime you see split, it means that if you actually go into the transaction, you're going to see more than one line in there. Now I can register income straight from into the register by clicking on the drop-down menu here where it says Add Check. Click on the drop-down menu and click on Deposit. Essentially, that's how you register income into QuickBooks, into the register directly. Let's say this money came on February 5th. Under payee, let's say ABC customer paid us, let's say $500. We'll put here 500. And then under account, we'll select one of our income accounts. We have to scroll down and find our income account. Or if we know the name of our income account, we just type it. So let's say this was remote services. I just type remote, select my income account, and that's it. I can select a memo if I want to. I notice that there's no space for putting a check number or payment type. If you want that, you actually have to save that transaction and then open that specific transaction, edit it, and then in here you will have to then add the additional description, payment method, or reference number if you want to. So the check register, it's a lot more limited in terms of amount of fields that you can enter, but keep in mind that entering in the register and entering manually through the deposit screen is essentially the same type of action. Another way to record income would be through a transaction called a sales receipt. I'm going to click on the new button on the left-hand side, in the left navigation bar, and go down into sales receipt. When I click on sales receipt, you're actually going to see a form that seems similar, looks similar to an invoice. The difference is that a sales receipt actually doesn't make a difference between the actual recognition of income and the payment. So with invoices, you could have income in January and you can have a payment in February. And then depending on how you report, the income could show in January or could show in February, because accounts receivable and a concept of cash on accrual basis. Again, we're not going to discuss that in detail in this particular video, but make sure you check the description for videos where we talk about the accounts receivable workflow. But going back to the sales receipt, what's particularly different than a deposit screen is that in a sales receipt, we also select the customer that's paying you. But instead of clicking on the drop-down menu for choosing which account in your chart of accounts income is going to be recognized into, what you're going to do is you're going to select a product or service that ties to that income account. So what's nice about the sales receipt, it allows you to itemize the income in much more detail, and then you can run reports that are not by account but by item, and you can see what your sales by a particular item is. So for example, on this particular sales receipt, let's say that we're recognizing the income where the customer paid us immediately. So let's say the customer paid us in cash, and I'm going to select here the account that the customer is paying us into. So this drop-down should be familiar because it's the same drop-down that you see in a deposit screen. Essentially, a sales receipt is like an invoice and a deposit both combined at the same time. So we're going to go down here and we're going to select from the drop-down menu, we're going to select remote hourly support, and then we're going to put here $75. And let's say we're also going to, let's say, charge them for some additional cables or something like that. So I'm going to go to add new because I don't have that item in my database. I'm going to click non-inventory. I'm going to put here wires, and we get to choose which income account this wires item points into. So let's say it's not on-site services, it's not remote services, and it's not any of these other income accounts that I see here. Maybe it should be an entirely different income account. So from this screen, I can create a new income account. So I'm going to create an other primary income, and we're going to call this miscellaneous hardware and cables or something like that. So I'm essentially creating a separate income category so I can track my different types of income. So as part of our services, sometimes we just sell them, let's say, loose wires. So let's say that was $42.96 worth of wires. We're going to skip sales tax. We have an entirely different video that talks about sales tax, but this is essentially what the sales receipt is. It's $117 that we got in cash. In cash, but it's going straight into the bank account. So I can choose, if it doesn't go straight into the bank account, I can put it into the petty cash account as we discussed earlier. So it's going straight into the bank account, and I have itemized the particular products and services that we're selling to this customer. Now I'm going to do save and new. So I'm going to do one more just so we can have a bit more flavor into here. Let's select ABC customer. And let's say for ABC customer, we're going to be selling them some hours. And let's say we're going to put here support, and that would be 36 hours at $56 a pop. And also we're going to add some wires, let's say for $27.89. And then this particular customer is paying me with a check, and the money is not going into the checking account. Let's say it's going straight into the savings account. So I'm just showing you all these different examples. So you start seeing, like in the real world, this is how it works, right? You receive money, you receive cash, you receive a check. Sometimes it goes to the right account, sometimes it goes to the wrong account. That sort of stuff happens. Okay, so we're going to click on save and close, and we'll finish those transactions. So you actually saw how we recorded income with both deposits and sales receipts. Now I'm going to do one more example, which is I'm going to go into the bank feed and show you with downloaded transactions how we would do the same type of actions recorded from the bank feed. Okay, let's go ahead and jump into bank feeds. I'm going to click on the transactions tab on the left-hand side and then click on bank transactions. So once we're in the bank feeds menu, we're going to see we have a whole bunch of transactions that were downloaded from the bank. We're going to be focusing on the deposit. So I'm just going to click here where it says received, so we can just look at the money coming in, and then we'll talk about how to classify some of these things. Now, if you already created a previous transaction, like for example, you notice that we had a transaction for $500 that we created earlier, the bank will attempt to match it. So let's say, for example, that particular $500 transaction that came through the bank on February 3rd matches the deposit that we created on February 5th. If it does match, we're going to click on add, or if it doesn't match and it's an entirely separate transaction, then we're going to click on where it says categorize, and then we create a transaction from it. For the heck of it, let's say that this particular transaction does match the previous deposit, and then I click on match. And then let's do the next transaction. So the next transaction, let's say we have this wire transfer coming in from ABC. Now you gotta be careful. Sometimes QuickBooks will recommend to do this thing called record transfer. You will never be able to record income through a transfer. Income is always gonna be under this categorize button or under find match if you're matching it to an existing invoice. Again, you wanna refer to the other video we did on invoices and accounts receivable for that. So we're gonna click on categorize, then we're gonna go to select payee. We're going to select whoever our customer is supposed to be. Sometimes the information comes in the memo. Sometimes it doesn't, depending on the type of deposit that you received. And then under select category, we basically pick our income category here, which in this case, I have to go look. Let's say this was remote services. So you have to be careful. Make sure you don't select an expense account when categorizing an income component, money that you have received. Then we're going to click on add, and that adds that transaction. So lastly, we see this counter deposit for $4,000. And let's say we're going to click on that. And let's say we actually got money from multiple customers. So instead of selecting here one customer and selecting here one income category, we're going to click on where it says split. We'll click on split. And then on split, then we get to pick the multiple customers that paid us. So let's say we got money from 3 different customers. So customer ABC customer for on-site services paid us, let's say $1,000. And let's say that Mary Smith for, let's type here remote, for remote services paid us, let's say $600. Oops, $600. And then we had XYC Corp paid us, let's just say $1,200 for on-site services. Let's do on-site services again. Select that in there. And then the difference here, let's say it's another $1,200. Let's say it's going to be worth of wires, for example. So we're going to pick XYC Corp and then pick our miscellaneous wires and cables account. I thought we had a cables account, maybe. Hardware and cables, there we go. And then we can put here lots of wires or whatever, okay? So we had 3 different customers that paid us. And because the money is being spread across multiple accounts, we actually ended up splitting into 4 lines. The add lines number here can be, you can keep clicking and you can do multiple lines. I've never reached the limit, so I really don't know what's like the total number of lines that you can add in there. So at that point, you click apply and accept, and that's how you would record income in through the bank feed. Now, I'm going to show you one last way to record income. This is not the recommended way, but I'll show you anyway because it is part of accounting. It's through a journal entry. So we're going to click on the new button and then click on journal. And then essentially, let's say on the 6th, we gave money back to our customer. So we're going to pick whichever income line you would have received the money in originally. Let's say this was customer ABC. And then we are going to debit. Debit is a reduction of income, $150. And then we're going to select the bank account that we pay them with. Let's say we pay them in cash, or maybe we bought a gift card in cash and mail it to them or something like that. So we're going to bring that from the petty cash account. And then we're going to put here refund for arriving late or something like that. Okay. So you can do that through a journal entry. In this case, this is a refund that we're recording through a journal entry. But if you were to record income through a journal entry, you would do it the other way. So that the dollar amount would be a credit towards the income account, and then it would be a debit towards the or against the bank account or the petty cash account. So we'll click on save and close. So now we've done enough transactions that we can actually see all of these things in a profit and loss report. So we're going to go into the reports menu on the left navigation bar. Then we're going to click on the profit and loss report. And then let's say we're going to see everything for the month of February from the 1st to the 29th. Click on run report. And then we get to see all of the income that we recorded through multiple transactions. Okay, so it adds up to 13,361. If I actually click on the 13,361, I get to see a detailed report that shows me, I'm going to collapse the left navigation bar here. That shows me all the transactions that I created. So we have some deposit transactions, we have journal entries, deposit transactions, sales receipts, and you get to see all the flow of money coming in and out related to income. You get to see who the customer is in the cases that we recorded customers. If you remember through the example, we didn't record customer names in some cases. So you get to see all that information in there. I want to show you one more thing with reports. I'm going to go back into the report list, and then I'm going to show you a sales by customer summary. I'm going to click on that. And the tricky thing about sales by customer summary is that only sales receipts and invoices show through here. So even if you're recording income through the deposits screen, they're not going to show in the sales screen, because sales implies that it's either an invoice or a sales receipt. So we cover sales receipts in here, and you want to check out the other video on accounts receivable workflow to talk about where we talk about invoices. So then when we click on this number, we can actually click on any of the specific sales receipts and invoices, and we can inspect the specific transaction. Now I'm going to go back and show you one more report. I'm going to go back to the report list, and then we're going to type sales and do sales by product summary. It's a little bit different. So sales by product summary, that's going to break out all the individual items inside sales receipts and invoices. So it's a little bit different. It doesn't show you income accounts. It shows you items. And as we know from the exercise when we created the items themselves point to or reference to the accounts essentially. So that's it. That's how you record income in QuickBooks Online without the accounts receivable workflow. Make sure you check out the other videos in the description so you can see all of the things that I cover regarding income, and also expenses and accounts payable workflows. So if you enjoyed this video, make sure to subscribe to the channel, check out the other videos, add to the comments below what you like, what else you would like to see. Hit a thumbs up on the video that you liked it, and we'll see you in the next one.